Good morning, guys. Welcome to this Monday, May 26th. It's going to be the last trading week of May. By next week, we're in June. Believe that? We are. This will be the last month in this quarter, then end of June. Then we wrap up the second quarter. So things are flying. Time is flying. This is amazing. So by end of so yeah, on the 29th, Friday is going to be the last day. On Monday is June 1st. So last week of the month, we're going to expect some rebalancing going on. Over the weekend, not much happened. It was Memorial Weekend. They keep negotiating, keep going back and forth, and and now yeah, everyone has an opinion about it. So no point of talking about that until we see what actually comes out of it. So, but it's still been negotiated. Market is up. It was up in the early yesterday's little short session, and they just reversed most of that in the overnight. I mean, they're net to the upside anyway. So, I'm thinking the market is hopeful. Uh, but I would just emphasize that things can fall apart pretty darn quick in that part of the world. So I would take everything with a grain of salt. But market right now looks like they're looking past it, looking for a reason to trade higher. So they were up, little baby session up here, backed off in the overnight. Right now we're kind of just holding our gains, and so we're starting range bound. I would say I would stay on the long side of this, at least for now. The news this morning, not much. Chicago Fed National Activity Index at 8:30. At 9 we get Case Shiller and FHFA home prices. 10 o'clock we get consumer confidence, Dallas Fed at 10:30. So yeah, a little bit, but I don't think any of it's going to really move it. Maybe consumer confidence is going to move this up a little bit, but I don't think it's going to be, nothing is earth shattering. Tomorrow though, we get nothing much to lean against. A 5-year auction, mortgage app, Richmond Fed manufacturing. So a little bit of information. Thursday, however, we get the PCE index, personal income number coming out on Thursday. Friday, not much going on there either. So overall, a mixed news week. I think Thursday is going to be the big. We have big news coming out. Other than that, it's all eyes on the Middle East and what the negotiation there entails. I think the market is kind of looking past the whole thing mostly, but it's you never know, and it's something if something does change, that you'll get the knee jerk reaction one way or the other. So just have to be you had to stay on top of it just in case. But I would start off the way this looks right now from the long side of the market. I'm watching this lower edge right here at 74.60s. Um, that would be the area to pay attention to for any big change. Other than that, early on here on the exchange member chart, looking to buy against weakness, 75.25, 75.15, 7500s for rotations up. Below 7500s, maybe take off the long bias at least for now, and then go back range bound. Still looking to buy against the lower area, 74.90, 74.80, 74.65s for rotations back up. So I'm not expecting a big sell-off by any means, and no reason for that as far as I can tell. But as you can see, we have a lot of range here on F1 before we really get down here to that 74, 50, 60, and that's going to be the way down here. So in the lower end of my chart, the F2 chart here, that's when you hit your 74, 55s, the 65s, the 80s here. So these three support areas is really where you had to start worrying about the short side of the market. If they start backing off that much, then I guess something is not quite right. On the way up, not going to be very aggressive on the short side. Short opportunities against that 75.50s and the 75.70s for rotations down. Again, this is something that's there's just not much data up here, so going to be a bit cautious about short setups up there, but favoring the long side of the market right now to get started, looking to buy weakness. I think the early on weakness areas is 75.25s, 15s, and the 7500s. Otherwise, to be reasonably aggressive on if you want to. Below that, there's no reason to be super aggressive on getting long. Then they're backing off a little bit more than you want for early weakness. So that's how we get started, fairly straightforward. And if they can pull off that negotiation and everything comes and they get something sufficient, then we'll have to see what comes out of it. But it's something the market, something everyone can live with, and then the market is just going to keep going higher at that point. On the Nasdaq, capital flow on the Nasdaq, you can see they're also way up here. Nice little move up to the upside on the Nasdaq. Backed off pretty much the whole thing, retraced the whole overnight here from Monday night or Sunday into Monday. A little baby session up here, but then everything backed off. They're down here testing the lows at the 750s. Now they're back up again. So overall, yes, stay on the long side on the Nasdaq. Look to buy weakness. I would look to buy against right now against that 830s, 800s, 750s down to the 700s. So set below the 29 700s, maybe take off the long bias and go back more range bound. The Nasdaq moves so much. It's as you can see here, the way down here is where you have an area to pay attention to the 430s. So if I had to go, you had to go this. We are down here at the 500s down here in the lower end of my chart. So the on the Nasdaq, if they start trading below the 700s, I would take off the long bias and go back more range bound, at least for the day session. Still looking to buy against the 650s, the 600s, the 550s down to the 490, 500s, and the 430s. If they start taking out this support area right there, then I would start worrying about the short side. And at that point, this is like just there. I should really, if I drag this just down a little bit, give it a little bit more room, or even make it wider, probably better to do. So you can see here after folding some stuff together, you have this ledge right there up to around about here. So this is the general area I would be concerned with. Yes, made it a little bit wider given that we have a little bit more data here. So that lower edge at 380 up to the 470, 500s. If they start taking out that area of support, then I would be more concerned about the short side or change in general direction. Other than that, I would just stay on the long side or favor the long side, look to buy weakness. Doesn't mean that you can see. I mean, you see every day how they can run it lower. It could be a nice trend to the downside and then reversal, a nice trend to the upside. That doesn't change much of the fact, but it's if you can get on one of those, so much better. But they would happen early on, right? So if they start taking this lower, start taking out a couple of support areas, that's kind of how fast you have to be on that if you want to get part of a bigger trend to the downside like that. I would probably favor the long side, try to wait for that crazy stuff to pass, and then look for potential strength going into the afternoon. That kind of trade seems to be a little bit more stable. It's just hard to figure out when it begins. Sometimes they fake you out a couple of times on the downside, and that's what I'm saying. So once you get back down here below the 700s, go back range bound at that point, and then start looking trade as a range bound market. In other words, you can sell strength at that point, buy weakness fairly equally, and if you start taking out some key resistance areas and start trading above these areas here, the 700 and 750, well, then you are back on track again. So the way I would look at it. All right, so but it is volatile. Nasdaq has turned into a real powder keg. That's difficult to trade, and you have to be real nimble on it. So my 80 tick stop maybe even too small now, but I had to trade that with a lot more caution. Finally, on the bond side of things, bond market is popping. The yields coming down pretty good. So I would say we are up here against the 12-15s. So on the bond market, from being down here in some territory where it looked pretty gnarly for a while, we have been grinding right back up again, and now we're trading up here above this edge, the 11, 15, 16, and we are back up here in this upper range, heading towards that 1410s. So we'll see how far they can go, but right now with the optimism out there, the bond market is signaling some strength, and the yields are pointed lower. That's a good sign. Now, yes, you didn't know. I mean, all this crazy stuff going on. Once they sort out the strait and the that whole thing gets settled, which can happen pretty quick, then everything changes very drastically. And I don't think they're going to let that thing drag out. I mean, I'm just surprised they've been so patient as they have it. But if they can get the negotiated settlement and get that done, and remember, they're not dropping any of the pressure on the Iranians. So, but that's what's holding everything back. That's like if that whole thing pops out and the plop, and then you'll see oil prices drop, and the market take off. Everything's going to start changing at that point. So it could happen pretty quick when it happens. All right. So that's kind of where we are. Back to the ES and the Nasdaq. So bond market, you watch because that's when that's moving like that. That's a good sign. So yields coming down, bond market coming up. But that could turn as well if they for some reason everything else kind of falls apart, which could happen too. So day by day is what it is right now. Looking at the just taking this step at a time and just watching the market, see what it wants to do. Right now, it looks very much like it's trying to trade higher. So that's how we're going to do. That's how we're going to approach it. Looking for early weakness, favoring the long side for rotations higher. Alrighty, guys, I kind of wrap it there. Nothing to say about the cryptos. Oil gap down. But I can mention that oil was down at 91 bucks a barrel. They're up to 92 now. So that's a good sign. Oil gaps down like that. So here's your F2 for oil. A big gap down on oil. That's a good sign. And you can see, I mean, if they something gets settled, oil will be down in 60, 70 bucks a barrel in no time. So things changes quick when everything is resolved, and that's going to be a permanent risk premium on oil gone at that point. That's going to be a pretty big deal. Anyway, we'll leave it there. So wrap it there for now. Good trading. I'll see you back at 11:30 for the next update. All righty, guys. Later.